Let's start with something crazy. Every time the world panics, billionaires throw a party. When the markets crash, when headlines scream recession, when everyone else is selling in fear, that's when the richest people in the world start shopping. Why? Because billionaires know something the average person doesn't. Wealth isn't destroyed in a crash, it just changes hands. And guess who's waiting to catch it? Let's break down how billionaires use market crashes to quietly get richer, while everyone else gets wiped out. The rule of the crash. Here's the brutal truth. Billionaires love volatility because chaos creates opportunity. Every crash, whether it's the Great Depression, 2008, or 2020, follows the same pattern. Fear rises, prices collapse, and the herd runs for safety. The rich don't panic, they prepare. They hold cash, they wait, and when the market hits rock bottom, they swoop in like predators. Stocks, real estate, businesses, everything goes on sale. It's like Black Friday for billionaires. They know that the key to getting richer isn't timing the top, it's surviving the bottom. And while the middle class is selling assets to cut losses, the elite are quietly buying those very same assets at a 70% discount. When the recovery comes, and it always does, the rich end up owning more, earning more, and controlling more than ever before. Let's talk history, how crashes create empires. Take the Great Depression in the 1930s. Most people lost everything. But not Joseph Kennedy, father of future President John F. Kennedy. While Wall Street was collapsing, Kennedy was shorting stocks, betting they'd fall, and he made a fortune. When the dust settled, he reinvested that money in real estate and businesses that later skyrocketed in value. He once said, "Only a fool holds out for top dollar." Kennedy became one of America's richest men during one of its darkest times. Fast forward to 2008. The housing market imploded. Banks failed. Millions lost homes and jobs. But for billionaires, it was the biggest clearance sale in history. While everyone else was drowning in debt, Warren Buffett was writing billion-dollar checks. He invested in Goldman Sachs, Bank of America, and Coca-Cola. Companies that looked doomed at the time, but came roaring back. One $5 billion investment in Goldman Sachs earned him over $12 billion in returns. He famously said, "Be fearful when others are greedy, and greedy when others are fearful." That's not just a quote, it's the blueprint. 2020, the pandemic power grab. Now let's talk about a crash we all lived through, the 2020 pandemic. When COVID hit, markets crashed faster than ever in modern history. Entire industries, travel, oil, retail, went into free fall. But guess who doubled their wealth in less than 2 years? The billionaires. While millions lost jobs, billionaires added over $5 trillion to their collective net worth. How? They had liquidity, they had connections, and they knew how to play the crisis game. When governments printed trillions in stimulus, that money didn't flow equally. It flooded into financial assets. Stocks, crypto, and tech companies all surged. And who owns the majority of those? The rich. Elon Musk, Jeff Bezos, and Mark Zuckerberg saw their fortunes explode during the pandemic, while small businesses disappeared by the millions. It wasn't luck, it was positioning. The billionaire playbook. So what exactly are the moves billionaires make during a crash? Let's break it down into their secret 5-step formula. Step 1. Hold cash when others overextend. While everyone else goes all in during good times, billionaires keep a portion of their portfolio liquid, in cash or safe assets. This gives them firepower when the crash comes. Warren Buffett famously sits on billions in cash, waiting for what he calls fat pitches. Step 2. Buy assets that others are forced to sell. During a downturn, people panic sell homes, stocks, and businesses to stay afloat. The rich buy those same assets for pennies on the dollar. In 2008, hedge funds and private equity firms bought thousands of foreclosed homes, turning them into rental empires. Step 3. Use debt as a weapon, not a trap. Here's the wild part. Billionaires borrow more during crashes, but not to survive, to buy. They know lenders panic too, so they negotiate ultra-low rates. When the economy recovers, they've turned borrowed money into massive profits. Step 4. Control, don't chase. While retail investors chase short-term rebounds, billionaires focus on ownership. Companies, land, infrastructure, patents. They don't buy stocks just to sell them, they buy control. Because control means income, influence, and longevity. Step 5. Influence policy. Here's the dark truth. When things get bad, billionaires also shape the rescue plan. They have direct lines to governments, central banks, and regulators. During every crisis, the bailouts, the stimulus, the reforms, somehow the richest always end up with the best deals. Remember 2008? The banks that caused the crash got rescued first. And who owned stakes in those banks? The same billionaires who lost money on paper but gained it all back with interest. The psychology of the crash. For most people, crashes trigger fear. For billionaires, crashes trigger focus. They understand that emotion is the enemy of wealth. The masses panic, sell low, and swear off investing. The elite see that fear as an opportunity because prices don't reflect reality during chaos, they reflect emotion. Ray Dalio, and the founder of Bridgewater Associates, says it best: the economy is like a machine, and crashes are just part of its cycle. He treats downturns like winter. You don't fear winter, you prepare for it, because you know spring always follows. The information advantage. Now here's another key to how billionaires win during crashes. They know before you do. They have analysts, economists, and even former politicians feeding them data months before the public hears a thing. They don't wait for CNN to say, recession confirmed. By the time it hits the news, they've already positioned themselves. That's why they can move early, selling overvalued assets before the drop and buying undervalued ones before the rebound. And even when they do lose on paper, they don't really lose because they own real assets. Land, energy, companies, things that don't disappear when a stock ticker turns red. The hidden truth about recessions. Here's the twist. Recessions aren't the end of the economy. They're the reset. They clear out weak businesses, overpriced markets, and inflated expectations. It's a painful but necessary cleansing. And billionaires know it. That's why they never waste a crash. Look at the patterns. After the 2000 dot-com crash, tech billionaires like Bezos came out stronger. After 2008, financial and real estate billionaires dominated. After 2020, digital and AI billionaires took over. Every crash changes who gets rich next. The trick is being early enough to buy into the next wave before everyone else. The real game: ownership during destruction. The secret isn't timing the market, it's owning the market. When prices drop, billionaires don't just buy stocks, they buy the infrastructure that supports those industries. Oil fields, data centers, farmland, shipping companies. When the pandemic hit and food supply chains broke, billionaires like Bill Gates started buying farmland. Why? Because no matter what happens, people need to eat. When the dollar loses value, real assets rise. It's not a conspiracy, it's strategy. The cycle continues. Here's the cycle they play again and again. 1. Expansion. Markets boom, the media cheers, and everyone piles in. 2. Crisis. The bubble pops, the middle class panics, and prices collapse. 3. Acquisition. The billionaires buy everything on sale. 4. Recovery. Prices rise again, and they sell or control more than before. By the time the next boom arrives, the rich own a larger share of the economy, and the rest own a little less. That's how the wealth gap keeps widening. It's not just inequality, it's engineered timing. The lesson for everyone else. So what's the takeaway here? You can't stop the crashes, they're part of the system, but you can change how you respond to them. Instead of panicking, study what the smart money is doing. Instead of chasing hype, build cash reserves for opportunity. Instead of thinking short-term, focus on assets that survive chaos. Land, skills, businesses, commodities. Remember, wealth isn't built in the boom. It's built in the bust. When the next crash comes, and it will, don't run from it. Be ready. Because while the world sees disaster, billionaires see discounts. When you think about it, every major fortune in history has a crisis behind it. Rockefeller built his empire during recessions. Buffett thrived through crashes. Musk expanded during chaos. The difference between panic and profit is perspective. So the next time markets fall, headlines scream, and everyone says this is the end, just know, somewhere a billionaire is smiling. Not because of greed, but because they were ready. And maybe the real secret isn't that billionaires get richer in crashes, it's that they plan for them long before anyone else believes they're coming. Because when fear controls the world, calm minds control the future. If you found this video eye-opening, hit that like button, subscribe, and share it with someone who needs to see how the game is really played. Because the next crash is coming. And now, you'll know exactly what the billionaires will do when it hits.